Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, let's stick to gold right now, and even more so the gold stocks. I want to follow up on a recent video that you just published asking the question, is this a major turn in gold stocks? We have seen a very quick rebound, started kind of mid last week, has continued through Monday and Tuesday. Today on Wednesday, the stocks are giving a little bit of that back, but when you consider just how quickly they have moved, really double-digit percentage-wise in about 5 trading days, I think we could have expected at least some sort of a cool down in that momentum. But the question remains, is this a major turn? Have we seen the bottom in gold stocks? What do you think?
It's very possible. I mean, you have the technical side of things and then the fundamental side of things. And on the technical side of things, a lot of good things have piled up. I mean, for GDX, the advanced decline line, which we've talked about sometimes in past interviews, over the last 6, 7 years or so, there's only been two other positive divergences where GDX made a lower low, but the advanced decline line did not. And so that happened for the third time in the last month. So you had that. That's a really good sign, especially when the market has been coming down hard and it made lower lows. So you have that, and then at the same time, whether you look at GDX, but GDXJ especially, if you look at things like new 52-week lows, there's a really strong positive divergence there. I mean, new 52-week lows peaked out, I think at the I want to say June or July time. So in other words, when the market was going down to a new low, you had a very high percentage of the GDXJ stocks making a new 52-week low. However, after a rally and the market went lower and made a lower low, it happened twice that the new 52-week lows in the stocks became fewer and fewer. And again, that happened even as the price of GDXJ made lower lows. So that's another really strong positive divergence. Then you have GDX and GDXJ were outperforming the S&P, so you have a small positive divergence there. So you have all these things, and then looking at various support levels. Even a couple of months ago, I was looking at 25, 26 for GDX, and I think around 20 for GDX, 25, 26 for GDXJ. So they came down to those really strong support levels on the charts. So looking at all these factors, and then what we see now so far this rally, if we just look at a 5-day rate of change going back 15 plus years or so, we've reached levels that you tend to see around significant bottoms. So we'll have to continue to watch, obviously, and see if this strength continues for a couple weeks. I mean, there can still be sharp pullbacks. And then at the same time, there's other things we can watch for, like breadth thrusts, which help confirm that the buying is really sustainable. But I mean, just looking at the technical factors, they're really strong that some kind of significant bottom has been reached. On the fundamental side, I mean, obviously it's more open to interpretation, but on the fundamental side, I would say the Fed, I just think it's unlikely that they're going to be able to continue to hike into next year. And at the same time, I mean, I think core PCE, which the Fed loves, I think that's down to 5% as far as inflation. So if we do rally here, if we do have a good bounce in the stock market for a couple months, I mean, maybe that will raise expectations that the Fed can hike into next year. But I think for the most part, we're getting really close to the end of the hiking cycle. They're probably going to be up to a max of 4% after the November meeting if they are able to hike. And then, we are starting to see some cracks in the surface around the world. So, I think it's looking pretty good for precious metals. And then, of course, gold had a false breakdown below 1675. So it's rallied significantly. So I think looking at technicals and fundamentals, the near-term outlook is obviously looks pretty positive, but obviously only time will tell. I mean, it could become obvious after the fact, but that's how I see it today.
Well, Jordan, I think you bring up a good point about the false breakdown in gold because it got down to 1622 and now it has clawed back. As of yesterday, it was over $100 higher closing around 1730. That's a pretty big move. But what really kicked things off was the middle of last week, the Bank of England pivoting and backstopping their markets. So on Wednesday and then again on Friday, we saw silver take off and we saw the miners take off really faster and harder than gold did. And then this Monday, silver was the big winner. I mean, it just shot up like crazy. It looked like a short squeeze. It went up 8.5, 8.7% at one point in time. And we saw the mining stocks really not keep up with that move in the metal, which was a little strange, but they'd already started moving the week before. So we had talked a couple of weeks ago about the potential of a non-confirmation bottom where silver and the mining stocks were leading things higher. Is that how you're still seeing it potentially setting up with such a strong move in the lesser precious metal and also in the mining stocks starting last week and carrying over into this week?
Yeah, I mean, look, it's interesting. I looked at the gold silver ratio last night, and that's cracked to some degree. And so that could come down some more. And that's obviously, I mean, that was a non-confirmation when we talked about it. And so that's significant that it did push much higher in recent days. I mean, back above 21. We'll have to see how the market fares. Like if we could see silver, obviously 22 is really significant. And then for gold, there's a lot of resistance in gold in the low to mid 1800s. So we'll see if gold and silver can surpass those big resistance levels. But those non-confirmations are definitely really significant because they prove to be accurate. They prove to be worth worrying about.
So, Jordan, there are a lot of technicians out there, a lot of people that claim to be technicians that throw out a lot of these different terms, and that's why I like to get clarity on these terms from you because, hey, you've actually studied technical analysis. You know what the definitions are of these terms. You even mentioned it. Gold had that false breakdown. Explain to us what a false breakdown is and what it means, what we see in the chart, please.
Well, false break in either direction. It's when a market breaks above a certain level or below a certain level. And then so you're looking at the chart and you're thinking, okay, this is a breakout because it's broken above an important resistance level, or it's a breakdown because it's broken below that resistance level. However, at some point, and it usually has to happen really soon. It has to happen within the first couple days, I would think, where the market, it continues a little bit after the break, but then it strongly reverses course in the other direction, and it even reverses far above or below what was the breakout or the breakdown point. Like for gold earlier this year, we kind of had a false breakout when it closed above 1900. It even made a quarterly close above. We were talking about that, but that proved to be a false break in the other direction. Now 1675. The fact that gold has been able to rally well above 1675, that tells you that it was a false breakdown. Like if gold rallied back to 1675, or it was like at 1680 or 1690, and then it was kind of sitting there, you could say, well, maybe that's a false breakdown, but it could be retesting because it hasn't moved that much above the previous point. But the fact that gold got all the way above 1700 to 1730, that basically negated breaking below 1675.
Well, Jordan, while we're doing some technical analysis definitions, just for people that are maybe not as technically savvy, you had mentioned the importance of the advanced decline line and that it was showing a positive divergence. Could you speak to what the advanced decline line is and what a positive divergence is, just for people that may not understand that verbology?
Yeah, sure. So the advanced decline line is a breadth indicator, which is another word for participation. So when you're looking at the cumulative advanced decline line, you're looking at it tracks basically every day the participation. And so it's tracking basically how many stocks in that index are going up versus down. So it's a participation indicator. And typically what you see in markets is at major turning points, you tend to get a positive divergence. And so a positive or negative divergence is when you're looking at an indicator, something that can confirm what the market is doing, what the price of the market that you're looking at is doing either way. And so, I'll give you the example with gold breaking down below 1675. So gold broke down below 1675. And so when something like that happens, you want to look at, okay, what's happening with the rest of the sector? Is silver also breaking down? Are the mining stocks breaking down in the same fashion? And then I take it a step further and I look at gold in real terms, like is gold breaking down against the stock market? And so looking at some of those things, which we noted a couple weeks ago, silver for one, silver had not broken down and made a new low while gold did. And at the same time, gold had been outperforming the S&P 500. And then I don't recall at the time, I think the stocks might have been showing a bit of a positive divergence there. So looking at that breakdown, we wanted to see, is everything else related to gold? Is it acting very similarly? And there were a lot of chinks in the armor there where those things were not. So that was telling us that, okay, maybe this breakdown is not going to hold. Maybe it's going to reverse course. So when you're looking at divergences, those are the types of things that you look at. Now, the other side, what we want to see now, obviously the advanced decline line, we want to see that continue to show really strong participation. And again, not only is it a breadth indicator, but it tends to be a leading indicator. So if the advanced decline line is really strong, that means the market itself is going to tend to be strong, or at least have some momentum behind it for a little while. And so at the same time, looking at this rebound, we want to see everything performing together. Gold going up, silver going up, the mining stocks going up. In a short-term sense, when one of these, like if we start to see silver weaken or the advanced decline line starts to weaken, but GDX and gold are still rising, those things could be negative divergences where they're not confirming, they're not making higher highs or confirming the move in gold or the gold stock. So those are things that we'll monitor here in the short term.
Jordan, I want to get a quick comment on the US dollar, because the US dollar definitely has been a headwind for not just metals, but pretty much all the markets. We've been seeing this inverse correlation. When the dollar moves higher, metals and markets move lower. The dollar did start to show a little bit of weakness here over the last about 4 or 5 trading days. Dollar came right down to test that 110 level, and it is starting to bounce fairly strongly again today. What's your outlook for the dollar? Do you think that was a almost healthy retest to continue that uptrend in the dollar?
Well, looking at the dollar over the weekend, it made a bearish weekly reversal. And so the dollar, I think it traded up to almost 115. And, the degree of the move here in markets, whether this, is this an intermediate term rally? Is it a medium term rally? I think it's more than a short term rally. But looking at the dollar over the weekend, it did put in this bearish reversal. And I think the breakdown point, or the previous breakout point, was around 104. So just looking at the daily or the weekly chart now, 108 is a pretty strong level. And then after that, you'd probably have 105. So if we're going to get a rally for, let's say, at least a couple months here, a broad-based rally, you're probably going to see the dollar come down to 105, I would think. And that'll support that rally at the same time. Obviously, the bigger question is, is this the major top in the dollar? I don't think it is. And then what happens later? We'll worry about that later if the dollar bottoms out and then it rebounds again. Markets could get sketchy again. But I think here and now, just looking into this quarter and into the end of the year, the dollar definitely has put in some kind of a top. And so I think the path of least resistance for the dollar over the next month or two is lower. And again, that's going to support, obviously, a lot of these markets, including precious metals.
Well, Jordan, one more factor to look at when we're thinking about the dollar is how interest rates have responded. It seems like not every day, but almost every day, the dollar and the rate seem to be moving the same direction. And when the rates are screaming higher and when the dollar is screaming higher, it seems like both the general markets and the commodity sector sells off. That's what we've seen the last couple of days to the reverse side, where the dollar pulled back and rates pulled back. Everything rose, the general markets and commodities. Today, we see the dollar up again, but we also see the 10-year back up again, and it continues to be an inverted yield curve where the 2-year is about 40 or 50 basis points higher than the 10-year. What's your outlook on interest rates?
Yeah, this is you made a really good point there, because what's been happening, if you look at the bond market, a lot of these indicators in recent months, these break evens, these forward-looking inflation indicators have all been crashing. The market has the market has come down 25%. And so bonds should have been rising in this environment. And they're obviously not. To this point, they have not. And I think a big reason for that, and this is not my area of expertise, but you have some sovereign funds that are basically selling treasuries so they can get dollars. So I think that, I'm stealing what somebody else said, but that makes a lot of sense because obviously, with the dollar surging, with problems around the world, people talk about it, there's a dollar shortage. And so I guess sovereign wealth funds who own lots of different things, including US bonds, they're selling those to get dollars. I mean, that's the best explanation here because otherwise, if you look at what's been happening in the break evens, forward looking inflation indicators, all those things have been coming down significantly. Markets down 25%. The forward looking indicators are telling us inflation is going to come down. And yet at the same time, people have been selling bonds. So that's very interesting to me. And that'll be, whether that, how high the 10-year can go and, whether there's a major turning point coming. Obviously, if there's a major peak in the dollar, I mean, if it just happened or it's coming later, because the two have been connected, then it makes sense that bond yields could come down after the fact. But it's really interesting because that, I think, has been the biggest surprise in markets this year is the fact that bonds have been unable to rally in the face of all these things that should have been really good news. So that's definitely something to keep an eye on.
Yeah, it ties into the whole central bank stepping away from being really the buyer of last resort in the bond market too. So that's a big player that is no longer, at least for now, in that market. However, we have seen some other central banks start to dive back into their bond markets. Jordan, thank you for your time. It's been an encouraging week so far for, I think, all investors because everything has rebounded. And even today, as we were seeing some weakness early on in the day, generally stocks are making a bit of a comeback as we're recording this. So we'll see how the rest of this week plays out. But at least so far, a good start to Q4. Jordan, thank you for your time. I hope you have a great rest of your week.